AMD just beat earnings on every single metric, and the stock dropped like 10%. If you're holding AMD or thinking about buying, you need to understand what actually happened here, because the headlines most likely will not tell you the whole story. Look, if you're short on time and just want the takeaway, AMD's quarter was solid, but the market punished it because the most important catalyst, their AI GPU ramp, is still back half weighted into 2026. While Wall Street doesn't want to pay for promises anymore and want proof instead, and AMD basically said, trust us, the big stuff comes later. In this market environment, that's just not enough. Now, that doesn't mean the thesis is broken. Actually, there's a lot to like in this report if you know where to look. The server CPU business, the cash generation, and the product roadmap is aggressive in all the right ways. The stock drop, a lot of that was sector-wide selling, not AMD specific. So if you're holding or thinking about buying, don't panic. But you do need to understand where the real risks are and what signals to watch. That's what we're going to cover. Hey, this is DataCat. Welcome to the channel. Quick background on me if you're new here. I spent some years as an analyst inside a Fortune 50 company. Not the flashy type, just the boring and average type who deals with messy data and code and meetings on a daily basis, and eventually traded all that for, well, this. Now I just break down financial data for people who actually want to understand what's happening with their money. The channel's only been around for about 6 months now, so I'm still finding my footing. I'm not going to pretend I have all the answers or that I've cracked some secret code. I'm just a guy who reads earnings calls so you don't have to. Think of me as that friend who's weirdly into spreadsheets. Every friend group has one, right? And if you like this kind of friends, a like and subscribe would be much appreciated. Anyway, enough with self-promotion, let's get into it. So AMD just reported its Q4 earnings. And on paper, and this looked like a clean beat. Adjusted earnings per share came in at $1.53 versus the $1.32 that analysts expected. That's a beat. Revenue hit approximately $10.3 billion against expectations of $9.67 billion. Another clear beat. And for Q1 guidance, consensus was looking for about $9.38 billion. AMD guided $9.8 billion plus or minus $300 million. There you go. Beat again. So you're sitting there thinking, okay, they crushed it. Why is my position bleeding? Here's what we need to understand. Beating consensus isn't the same as beating the real bar. The published analyst estimates, that's like the minimum passing grade. The actual bar, the one that moves stocks higher, that's set by buy-side expectations, the big institutional money. And those folks were looking for something more aggressive given all the AI spending happening right now. AMD didn't give them that. They gave them fine. And on top of that, a fine in the current nervous market gets you a tiny haircut. Alright, let's talk about what's genuinely strong here because it's not all doom and gloom. I want to be clear in case you misunderstand me. I'm a cat, not a bear. Sorry, couldn't resist. First, the server CPU business EPYC is showing real strength, and this is actually notable. AMD said their server CPU revenue is expected to grow from Q4 into Q1. Now that might not sound exciting, but here's the context. Q1 is normally seasonally down for server CPUs. That's just how the cycle works. So when a company says they're going to grow through a period that's usually weak, that tells you one of two things. Either they're genuinely taking market share and winning platform deals that overpower the seasonal patterns, or there's some pull-forward demand happening, customers ordering early for whatever reason. Either way, it's a meaningful signal. The server CPU story is probably the cleanest part of this whole earnings call. Second, data center profitability is legitimately impressive. They posted $1.8 billion in operating income on $5.4 billion in revenue. That's roughly a 33% operating margin. For a segment that includes a rapidly scaling AI accelerator product line and heavy software investment, that's strong. It suggests a few things. EPYC is doing a lot of heavy lifting on the margin side, and possibly GPU margins are better than some analysts assumed. There were also some one-time items helping, spoiler alert, from China, which management acknowledged, so take that with appropriate skepticism. Third, cash generation is excellent. $2.1 billion in free cash flow for Q4. They're sitting on $10.6 billion in cash and short-term investments. Buybacks are continuing with $9.4 billion in authorization remaining. Why does this matter? Because scaling AI infrastructure, the racks, the accelerators, all of that, it's working capital hungry. Having this kind of liquidity gives them cushion to absorb bumps without getting into trouble. And fourth, The product roadmap is aggressive and coherent. On CPUs, Turin is shipping now, Venice comes later this year. On the GPU and platform side, MI350 is ramping, MI450 with the Helios platform hits in the second half, and MI500 is planned for 2027 on 2nm with HBM4E memory. The strategic direction makes sense. They're moving from selling chips to selling rack-scale systems. Why? Because hyperscalers, the big cloud companies, they increasingly want to buy outcomes at rack scale, not individual GPUs. It's a smart pivot if they can execute. Okay, now let's talk about why the market got nervous. Because this is where most coverage glosses over the details now. I'm not saying these are going to break AMD's thesis, but these details matter if you're an AMD investor. First major issue. China continues to remain as a total wildcard, and AMD basically told investors, don't model it. They guided 100 million in China MI308 revenue for Q1, and then said there's no additional China revenue forecast because the situation is dynamic. Licenses for MI325 are still pending. So if you were quietly baking China upside into your 2026 AI numbers, that just got removed from the equation. Second issue, and this is important to frame correctly. The AI GPU story is still timing heavy, though management did provide some useful color. During the call, an analyst asked about the data center GPU ramp and mentioned that investors were thinking somewhere in the $14 billion range for the year. He specifically said he wasn't asking management to endorse that number, just looking for some flavor on how the ramp would look. And to be fair, management gave a reasonable response. She said they guide 1 quarter at a time, which is pretty standard practice. But she did offer some helpful details. Data center overall will be up in Q1. And on the GPU side, she said they feel really good about GPU revenue, including China also being up. So it's not like they stonewalled the question. They gave directional guidance that was genuinely positive. The issue is more that investors wanted a full year number to anchor on, and AMD isn't ready to commit to that publicly. Depending on how you view it, you could either say it's evasive or just cautious, especially when you've got product transitions and China uncertainty in the mix. But what they did confirm, MI355 ramps in the first half, MI450 revenue starts in Q3, but ramps significant volume in Q4 and into 2027. So please understand that the risk profile here is back half loaded, which makes some investors nervous, while the Q1 color they gave was constructive, not bearish. Third issue. Rack-scale systems are significantly more complex than selling 8 GPU servers. AMD said the vast majority of MI450 in 2026 will be rack-scale. Revenue gets recognized when shipped to the rack builder. Now think about what rack-scale actually means. You're not just selling GPUs anymore, you're exposed to networking, cabling, optics, switches, power and thermal integration, rack-level validation, partner readiness from OEMs and ODMs, and customer acceptance testing at scale. Management actually referenced a competitor's rack ramp problems from last year, saying they learned from it. That's basically an admission that this is a known failure mode in the industry. They know it's risky, they're hoping they can avoid the same pitfalls. It's like a cat watching another cat misjudge a jump. You think, okay, I'll do it better, but you're still jumping. Fourth issue. The client PC market isn't helping. AMD explicitly said they're modeling PC total addressable market down a bit due to recent memory price inflation, and the second half of the year will be sub-seasonal compared to the first half. So even though Ryzen is performing well, the broader PC market isn't a tailwind. This matters because when your AI GPU revenue is already back half weighted, you really want your other segments to provide stable insurance. Instead, you've got more headwinds. So let's put this together. How does a stock drop 10% on a beat? 3 reasons. 1. Guidance was fine versus consensus, but not fine versus the real bar. The midpoint beat street estimates by maybe 400 million. But some analysts wanted to see accelerating momentum right now, not a promise of acceleration later. AMD just couldn't satisfy them. 2. The biggest catalyst is still back half weighted. Markets punish this when they're nervous. The logic is simple. If anything slips, silicon racks, networking, partner readiness, the whole year's AI story gets pushed out. And in a skeptical environment, investors aren't willing to underwrite trust us promises. 3. The entire semiconductor and AI infrastructure trade was derating the same day. Nvidia was down, Intel was green, but was also suffering. When the whole sector moves together like that, it tells you a lot of AMD's drop was factor and sector driven, not just company specific. Options markets had priced in about an 8% move heading into the report. A 10% actual move isn't crazy when the whole group is de-risking. If I had to summarize it in one sentence, AMD beat consensus, but the market discounted it because the beat included non-recurring elements. The key AI ramp is still back half weighted, and the whole semiconductor trade was getting sold that day. Anything that didn't clearly re-accelerate forward momentum got punished. Alright, so what should you actually pay attention to in the coming quarters if you're invested or considering a position? First, watch the data center revenue split signals. Even if AMD doesn't disclose specific instinct numbers, listen for phrases like GPU revenue up or down sequentially, MI355 constrained versus demand, and pay attention to whether CPU is doing all the heavy lifting or if GPU is genuinely contributing. Second, track operating expense discipline. Does OPEX growth actually slow relative to revenue, or do they keep leaning in because competitive pressure forces it? If revenue growth stalls but OPEX keeps climbing, margin expansion becomes a problem. Third, monitor the rack scale execution. Any hints of integration issues, partner delays, or customer qualification problems, that's your early warning signal. And fourth, same old, same old. Continue to keep an eye on China policy developments. This is mostly out of AMD's control, but it materially affects their AI revenue ceiling. Now for context, management cited 2025 earnings per share of $4.17 and mentioned a path to over $20 in the strategic timeframe. That's roughly a 5x increase in EPS. That's extremely ambitious. It requires massive revenue scale-up and significant margin expansion. Markets will demand proof points, not narratives. Especially after the AI-led multiple expansion we've seen across semiconductors. The easy gains from AI is the future are probably already priced. From here, execution has to match the story. 2026 looks like a setup year with a dangerous profile. Stable performance now, big bet later. EPIC should continue share gains. Venice strengthens their positioning late year. On the AI side, MI355 grows through the first half, but probably not enough to satisfy the most aggressive expectations. Then MI450 and Helios begin in Q3, with the major ramp in Q4. That's where execution risk becomes the dominant story. 2027 is where management wants you to anchor your optimism. MI450 ramps further, the tens of billions AI revenue claim gets tested, a next-gen console cycle helps semi-custom, and MI500 arrives. But that's also a massive dependency stack. 2nm process, HBM4E memory, and rack-scale system integration all have to work. Look, AMD is a company with a coherent strategy and a real path to growth. The problem isn't the fundamentals. The problem here is timing, and a market that's become less patient with back-half promises. If you're a long-term holder, the thesis probably still holds, but you need to accept that volatility around these execution quarters is going to be significant. If you're considering buying, understand what you're actually betting on. A back-half 2026 ramp that has to go right. That's the real picture. No sugarcoating, no hype. If you found this breakdown useful, consider leaving a like. It helps the channel more than you'd think. And if you want more of this kind of analysis, subscribe. I put out content regularly, trying to cut through the noise and give you what actually matters. Alright, thanks for watching. DataCat out, and I'll see you in the next one.